Okay, in this video, we're going to do a full breakdown on this trade here on the pound dollar. Today is Thursday, it's February 18th, 2021. I'm going to show you from start to finish how we got into this trade. I actually had a coaching session with two new coaching students this morning. We got together online prior to the London Open. Now, you'll hear me say in a lot of the videos in the membership course that if I'm going to day trade, the London session can be a pretty important opportunity for me. It's not guaranteed to give you a trade every single day. That's just not possible. I mean, every day is not going to be the exact same thing. We know that. So you have to be prepared sort of mentally for whatever opportunity you get. And I'm going to show you on another chart, a bar chart, how very often the pound dollar will start to make a move prior to the London Open, and it could set up a reversal or it could set up an opportunity so that when you see that movement prior to the London Open, there could be a continuation of that same movement in the same direction. So that's what happened this morning. I'll break it down to you for you in just a moment here. But I want to start off here with the point and figure, because the point and figure is always, the way I trade it, it's always going to be the last step in the confirmation to get into the trade. It's going to give me a precise entry. So this would be compared to, let's say, for example, if you're used to looking at candlestick patterns and you're waiting for, let's say, a bullish engulfing candle at, a bounce off of support or some kind of a evening star or morning star, depending on which direction you're trading it in, something like that. That's generally what a lot of people do when they're looking at candlestick charts. So I used to do the same thing. The first year of my trading career, I bought every book that I could find at the bookstore on candlestick patterns, and then I just started trading candlestick patterns everywhere. The biggest mistake I made was trading candlestick patterns inside of consolidation and not realizing what I was doing. And I would have some trades that would win, some trades that would fail, and it just kept churning and chopping, grinding away at my trading account. It wasn't getting me anywhere. So again, the final step here is going to be in the point and figure. So the biggest thing to keep in mind, the biggest factor here would be in how you construct your point and figure, because I can change the construction of this point and figure to mimic, let's say, a larger time frame like the 4-hour or the daily. So if you don't have time to wake up and trade the London session, you could certainly adjust the point and figure so that you would get an opportunity to capitalize on some of this movement here. It's just not going to be precisely at the same time, and you might be able to capture a bigger part of the movement that could be a trending move that develops and continues for, let's say, a couple of days or maybe a week or so. So you're going to get the same opportunities. You just have to wait for them if you're trading off of a larger time frame, something that would mimic, let's say, a 4-hour or a daily time frame. But again, for day trading, and I say this quite a bit, so my schedule will change, your schedule might change, and you can make that adjustment to day trade on certain days that you can spend 6, 7, 8, 9 hours in front of the computer, and you can trade during the London Open. Now, this setup also happens during the New York session. It really depends. Every day is a little bit different. Sometimes I have to wait. There really isn't too many opportunities during the London session, and I get an opportunity that looks just like this during the New York session. So this could also be in relation to or as a result of economic data. So economic data isn't necessarily, as soon as I hear the news, it's not a justifiable reason to get into the trade just because I hear the news and I'm trying to capitalize on that initial movement. I used to do that. That was, trading the news, and you can lose a lot of money really fast. There's so many things that can go wrong, right? The broker may not fill it at the same location you're expecting to get filled. The trade could disappear from your platform and then pop up an hour later or 30 minutes later. I've had things like that happen to me. So the change and the reaction with the news is still going to give me an opportunity to trade it here on the point and figure. So let's just jump right in here. The entry here was at 1.3857. You can see it right there. It was a triple top entry. This is a technique that I teach my coaching students, a triple top. We trade double tops, triple bottoms, double bottoms, catapults, reversals, all kinds of things, semi-catapults. There are a lot of different opportunities to trade point and figure setups and patterns on different time frames. Again, these work on a 4-hour, a daily, a weekly time frame. So even if you're looking to invest in certain stocks, the same thing, the same basic setup that we're going to go through here to today can be applied to anything that you're going to trade. Commodities, futures, indices, whatever it is that you're trading. So again, today we're trading here the pound dollar. Now this paid approximately 98 pips to the target, the first count, which was 98.56, but you can see that it's gone a little bit higher. It almost tagged the 74. I think this column went up as high as 71. Now sometimes the point and figure will stop there at 71, but the actual high may be a little bit higher, the actual high. So you would look at a candlestick or a bar chart that would actually show the high there hitting the 74. So that would add to that overall count. So 98 pips was the target from the entry to the first target here at 1.3956, and then you would add from 56 to 74. That's actually the last target here based on the data. Now if it continues further, I can go find another count depending on how I construct this chart, of course, and that would let me capitalize on a bigger move. So again, as I mentioned, if you're trading this and you've got a limited amount of time, let's say you're trading off a 4-hour or daily, you could certainly find a count that would project the take profit targets much further, and you'd get a bigger piece of this move. You would also slow things down. You would get one entry and just let it work, just let it do its thing. Now point and figure is extremely accurate, and this happens all of the time. Almost every single time we get into a trade like this is exactly what we get. We know, all of us know who use it, who use point and figure. We all get the same entry. We all know where our stop loss is, and we all know where our take profit is. The other advantage with point and figure is that you can determine initially from the entry where your stop is and where your targets are what the risk to reward is. So some people like to trade as long as it's at least a 1-for-1. That's okay if that's your strategy, if that's your methodology, and that's what you're comfortable with. Other people won't look at any trade that's nothing less than a 2-for-1 as far as the reward to risk, and then other people are looking for a 3-for-1. So here you can calculate all of that prior to getting into the trade, and you can decide if you actually want to take this trade or not based on the reward to risk. So it's a great method. And again, I've said this many times that the greatest traders, many of the greatest traders in history have been using point and figure. Many larger firms use point and figure. It's kind of like the hush-hush kind of secret that people don't really want to talk about, because a lot of small-time traders don't really want to invest the amount of time that it takes to learn this strategy and pull all this together and do it correctly. We're also trading with smart money, as you'll see in just a moment. And, they just don't want people that aren't going to take it too serious to have that opportunity. I mean, I get it. You work really hard at specializing in something, and you want to guard that. You really respect it. It takes a lot of your time. So let's go ahead and start off with now that we've got this out of the way with the point and figure, you can see where the entry is, you can see where the targets are, you can see what's going on. You can see that there's that backing up action here and another retest and a bounce. There's so much information going on when you know how to read the point and figure, but let's go ahead and go to the bar chart. So I had this chart right here. This is actually the chart that I was using when I was working with my coaching students this morning. And this is a 30-minute bar chart, pound futures. You can see that this is actual volume. This is not tick volume. And this is based on contracts traded, again, futures. So this was all marked up with all of the information that I'm going to show you here in just a moment, but I deleted it because I wanted to walk you through step by step exactly how we were able to construct this reversal and this bounce. And I talk about, and you've probably heard me say it many times in my videos, counting the waves. That's just the way that I refer to it. And what we're doing is, and what I teach in the program, in the coaching course, is we're analyzing phases of consolidation, and we're determining how and when smart money is stepping in to acquire. In this case, it would be a base here, right? We're looking at an area of accumulation, and we're looking at the clues to determine where they're stepping in and where we could get in and expect that explosive breakout and move. Because you'll notice with the point and figure that most of the time when I get into the trade, it's just prior to that big breakout and that move, that accelerated move here. And they're really big moves. We're not scalping with my trading system. I don't scalp. So I'm not jumping in and out and taking 3, 4, 5, 6, 7 pips and using a 12 to 20 pip stop loss. I'm not doing anything like that. We're just simply waiting for a better opportunity when the majority of the market or that bigger move is about to accelerate. And that means that I'm in the trade for a very little amount of time compared to trying to jump into a trade over here where it doesn't make any sense and it gets choppy and it's volatile inside of that consolidation. Very often, it can get pretty exhausting when you don't know where it's going to go and how long it's going to take to break out. When you don't understand these concepts, that's also going to have some kind of a mental psychological impact on your ability to hold on to the trade when you don't know what's going on and when it's going to break. When you track and follow and count the waves and watch the footprint of smart money and know when to get in and then use the point and figure, you're getting in here instead of over here inside of this chop. So we analyze the phases of consolidation, and we have a phase A, phase B, phase C, phase D, and then the breakout. And that tells us, depending on where price is in relation to the phases, when we should be in the trade and when we should stay away from getting into trades. Because generally I stay out of the markets when price is inside of phase B. So there are ways to classify and to confirm what phase price is actually in. So I teach you how to do that. So you're not like guessing. You don't look at the chart and just go, well, I don't know what phase it is. If you follow the rules and the instructions and you practice this, then you'll know what phase price is in so that you can determine when to get into your trade. So again, I had all of this marked up. I'm going to pause this and I'm going to go back and show you everything and break it down for you and show you exactly how it was prior to the breakout and the turnaround here and that reversal, that bounce to the upside, and how we traded it. So give me a moment and I'll put everything back the way it was initially. So this is a breakdown of what we were looking at prior to this move here and this test just before the market opened, the London market opened right here. So what I was looking for, and what I do very often, is I'll go to the chart and I start looking at and trying to highlight some of these candles that have an unusual range, or some people refer to it as the spread, which means from the high to the low of that bar, it's unusually large. Ultra high, ultra low, something to that effect. You'll notice that some of them are really small. You get these little trending moves where they're really not doing a whole lot, but you can kind of see that it's more of the continuation of whatever trend it might be, even if it's a little short-term trend, things like that. So this one definitely was something that we were paying attention to even yesterday. So this was highlighted. This was again, this is on a 30-minute. So let me stop right here, because the question might be floating around in your mind where you're thinking, well, what time frame is accurate? What time frame is appropriate? And this was a question that I remember going through. I still answer this question almost on a regular basis with my coaching students. They'll say, which is the best time frame? I see you moving through different time frames. Well, here's what I want to say. First of all, you should be moving through, if you're day trading or even trading on the larger time frame, like a 4-hour or weekly, monthly, daily, things like that, you should be looking at different time frames throughout your exercise when you're sitting down at your charts and you're looking for opportunities. You shouldn't just be looking at only one time frame. There's going to be one particular time frame that you're going to use to execute the trade, but you want to know what's going on the time frames above the time frame that you're looking at. So in this case, a 30-minute, well, I would toggle through the 1 hour. The 1 hour is also something. So the 1 hour is showing me pretty much the same patterns and the same support low and resistance that the 30-minute is. I would probably stick with the 30-minute because I'm probably going to see that turnaround or that turning point a little bit sooner. Now, sometimes I'll go to a 5-minute, and sometimes the market's reacting to a 5-minute. So I've noticed, and I've said this many times, I noticed this right away in the first couple of years of my trading career, that when I would focus on just one particular time frame and the market just wasn't giving me an opportunity, I couldn't see a setup very clear on the time frame that I was looking at, I would go through different time frames and then things would become pretty obvious. I could see things a lot clearer where I had a definite support low or resistance, and you could see the reversal. When things start to make sense on that time frame, it's likely that the market is trading or reacting to that time frame on that day, and it's not always going to be the same. So that's why you've got to go through and move through these different time frames. So if you're going to day trade, I would recommend looking at a 5-minute, 30-minute, 1 hour, and then possibly even the 4 hour. There's been days when I've been day trading Nothing seemed too clear on the 30-minute or the 1-hour chart, but then I went to the 4-hour chart, and then it actually gave me an opportunity to see things really clear, and I could see price bouncing off of a clearly defined old support level, and price bounced, reversed, something similar to what you see here, and then it gave me an entry on the point and figure, and it was a pretty explosive move, and I earned about 169 pips on just one trade within just a couple of hours. So the pound dollar, that's the other reason why I like to trade the pound dollar. It can provide pretty decent opportunities just like this, big moves. So you're seeing price here again move up as I speak. So I'm going to go over here to the point and figure, and you can see it's already hit that final second target here at 74, and it's blown right through it. 80 is a psychological level that we would trade it to. So I say very often, if you're hands on, you would set a price alert just a few pips before, or a few points before your targets, and if you can capitalize on this opportunity as it's taking out these levels, sometimes it'll stop right at that, the count, the target, and then other times, like today, we're going to get more follow through to the upside, which is exactly what we expected. And if you're hands on, where you can manage the trade, well, then you don't need to. Let's say you have to step away, right? Let's say you're at work, so of course you would have to set your take profit level within your platform to close out the trade. If you can't come running back to your desk to manage the trade. But if you're a day trading and you've got all the time, and again, this depends on your day, right? You can make adjustments here to the amount of time and the type of charts and the setup and the time frames that you're using based on how much time you have to trade today. Each day it might be a little bit different. And again, for me, it's that way. For many of my coaching students, it's that way. They're operating full-time businesses, and sometimes they have a little more time to sit at the desk. So if they can sit here and manage this, well, when it goes through 74, we know that the next target that we would trade it to, if it's going to continue to trend, would be psychological levels. That's normally how I would do it, and 80 is one of the psychological levels. The next psychological level is the 00. So if this continues, we would trade it straight to the 1.4 thousand level, the 00, and then beyond that would be 20, and then above that would be 50, and then back to 80, and it just repeats with those psychological levels. And I've used those psychological levels since I started trading. I mean, it's always been that effective. So this is actually paying a lot more at this moment, more than 98 pips. We're up well over 100 pips. We're going to get close to, let's say, 120, 130. It really depends on where it stops. So this could go, maybe it'll fall just short of the 1.4 thousand. I would recommend not holding out for every single little pip, and perhaps we could trade it to the 1.3930, 1.39, let's say 95, 96, 97, something to that effect, where it stalls. You can see it there. And then you've done really well, from 1.3857 to 1.3990-ish, you're making quite a bit. So we'll go back to this in a moment. So let's go over here to the breakdown and how we were able to trade this prior to the markup. So again, 30-minute chart, I'm going to be looking at certain candles that are printing an unusual amount of activity. You can see here with the volume, I've indicated that, I highlighted that. Now, as far as the phases, I talked about analyzing the phases of consolidation, and this is a range of consolidation. You can see that within that bar right there that I have highlighted, most of the trading took place within that range, that 130-minute bar range. Now, I expect to see tests and where price exceeds these support and resistance levels, and that's okay. That's exactly what I want to see. And the reason that I want to see that is that it's giving me these opportunities to set up these reversals. You can see that price is moving down and through support but fails. All of the candles are holding above that. That's a clue. And you can see volume stepping back in. You can see these bullish engulfing candles or bullish reversal candles where they're closing, let's say, above the actual open, things like that. I'm looking for these little clues along with volume as we move into the London session open. And then you get that reversal and that bounce that confirms that move. I talk about smart money. You can track the footprint of smart money. I'm not going to get into the details because it would take another 30, 40 minutes to talk about how you track smart money, but I'm going to share with you a few tips. So initially, when we get that stopping action, we're going to see some kind of automatic reaction. That stopping action can be where smart money steps in to start this acquiring process. So they're going to acquire shares or whatever the instrument is that you're trading, and they're going to acquire inside of accumulation. So this would be, accumulation would be consolidation at the lows. They're going to acquire at the lows of that range of consolidation. not at the highs. And you can see how volume reacts when price is down here at the lows. You can see that it starts to accelerate here and pick up. That's also helping me confirm the footprint of smart money. I also know how smart money acquires within this range of consolidation, and I can analyze the phases. So we've got phase A, phase B, phase C, phase D. This is very important to understand this concept, because you can track how smart money is acquiring and moving, and if it's confirming as it continues as this whole consolidation process unfolds, it's just a reminder and a confirmation that what you see is exactly what you expect them to do, what we know and how we know smart money acquires throughout this process. Now the process would be the same in distribution, which would be consolidation up here at the highs, and then it would be that markdown phase or that new trend to the downside. It would be the same thing, just in the opposite direction. There are some nuances that you need to be aware of, the way price moves around inside of accumulation versus distribution. I talk about that in extensive detail in my membership course. So again, we have a stopping action here. We've got an automatic reaction, and this sets the ranges, sorry about that, this sets the ranges of the consolidation that I'm going to track, that, you know, I want to watch how price moves within these ranges. Now, usually the people that are trading inside of these ranges here, where you see my cursor moving, it's usually inexperienced traders, and I was one of them. Initially, like I said, I started trading candlestick patterns even inside of ranges like this. They just didn't make any sense, but I was firing off trades just based on bullish or bearish engulfing candles, and it really isn't that effective to trade that way inside of consolidation. You're going to have some wins, some losses, and it gets really frustrating. So what happens is, when you trade inside of phase B and you get chewed up, right? You're trading in different directions and none of it's working. We've all been there. I used to make this mistake. You end up grinding away at your account, so you could be slightly negative or maybe at break even. And then here at this point, when it actually breaks out, and even if you could capitalize on this move here, what you end up doing is just replacing some of the losses that you experienced by trading inside of this range. So you need to understand these concepts of analyzing the phases and tracking the behavior and the footprint of smart money, so that you know exactly when to get into the trade and when not to be into a trade. You should not be in a trade in this range. Let the smart money do their thing. Let the inexperienced traders play around in here and grind away at their accounts with, you know, losses and some small wins and just all that frustration. It's just really choppy. It's very difficult to trade in there. And then we know where phase C and D is. We know where our last test of support is. We have it highlighted here. We know that as we approach the London Open, we're probably going to see some kind of a move. That's exactly what we got today. Here's our confirmation. We get the breakout. So again, I'll go back to the point and figure to show you what all of this looks like on that point and figure, and then the entry. But here quickly, I just want to show you again the stopping action, the automatic reaction. I used to move my support and resistance lines at the actual lows or the actual highs, and when I did that, I would lose track of what I was looking at. It wasn't helping me identify the footprint of smart money and analyzing these phases of the consolidation. By leaving the support low at that stopping action and leaving my resistance level at the automatic reaction high, which is here, that helps me confirm the up thrusts that are failing and they come back in. That helps me confirm the moves to the downside, watching where these candles close in relation to that support low here, and it shows me how price is turning around here. This is the behavior of smart money. This is what I want to track, and this helps me confirm the phases and then get into my trade. This is exactly what you need to learn. This is the battle between supply and demand. That's exactly what you're looking at here. And we can confirm it not only with the behavior and knowing where your resistance and support levels should be drawn. Now, I'm not saying don't draw it here at the actual high and the actual low. Yeah, I'm well aware of where they are. But what I'm saying is, and what I used to do was make adjustments, but it would completely change the structure of this consolidation phase that allows me to track smart money and analyze the phases. It's the phase analysis and the tracking the smart money that allows me to identify these turning points. And I'm basically, throughout this process, following up with each candle that closes or each bar that closes and confirming that everything is moving as I expect it to, if what I'm looking at is actually accumulation and smart money acquiring prior to the breakout. This also helps me with my confirmation that everything's moving exactly as I expect it to. And this happens over and over and over. This behavior where I draw all of this information from the phase analysis, the consolidation, the stopping action, the up thrusts that fail, the moves to the downside, the little springs here. In some cases, sometimes we don't get a spring, we just get sort of a bounce off of that support. There are different schematics that we use to analyze the phases of accumulation or distribution. I have those in the membership area. I highly recommend my coaching students just kind of print them off and keep them next to the computer so that you can track the behavior here and analyze these phases. And then, of course, with volume, we want to see real volume. Some people will use tick volume on the MetaTrader platform. I don't, but it can be done with tick volume. I just prefer to look at the futures because I'm going to get real transparency, real futures contracts traded here at this point. I can see the amount of volume. And that confirms everything to me. So I take all of this information once I have the consolidation, this accumulation phase here, broken down into the different phases, analyzing this move here. You can see how it's sort of moving through support, but none of the bars close below that support. This turning point, we're going to go back to the point and figure, and I'm going to show you how we pull all this together. Back to the point and figure, this is that consolidation phase. Here's that move to the downside. There's the testing, and you can see how some of these columns, they're moving down just below that stopping action right here. There's the stopping action that I showed you initially that we had highlighted on that bar, that one particular 30-minute bar. It was shaded. It was one bar on the 30-minute chart. So here's that stopping action. There's the automatic reaction. There's the testing and the moving through support. I expect that. There's another test here above resistance, and then it pulls back down. There's the final test, and then I get that reversal, and there is my triple top entry. So the confirmation here was this move right here, and how these candles or these bars were all closing above resistance along with volume stepping in, the last test, the phase here that I need to identify and confirm prior to getting into my trade. Now I know it's safe to get into my trade. We've moved out of phase B, and now I know it's safe to get into the trade, and I can see that smart money at this point has acquired enough. They've done all of their testing, and now it's ready for that markup. Now back to the actual count. So in addition to getting an entry, point and figure also gives me the count. It tells me how far price is going to go. Sometimes people will refer to it as fuel in the tank. How far is it going to go? And that's what you want to know, because it was a big problem for me when I first started trading. It's a big problem for many traders. How long do you hold on to a trade? Where do you take profits? Sometimes people will use the Fibonacci tool and they'll find extensions. I used to do that, but it wasn't very accurate. It would work sometimes. Most of the time it wouldn't, and it doesn't work if you use the Fibonacci tool at the wrong location and the wrong type of structure, the price structure. This works all of the time. This is exactly what we need, and we all get the same reading. We all get the same entry. We all get the same targets. We know exactly how long to hold on to the trade. So you're not giving it back profits. So sometimes I was lucky in the beginning of my trading career. I'd get into a trade and I was up 30, 40 pips, and I would think, this is awesome. What if I could get 60 or 70 pips? I'm just going to hold a little bit longer. I had no justifiable reason for holding on other than the fact that I was having fun that morning. I was up, 30, 40 pips, so I wanted more, and I thought, could I hold on to more? And what would happen is it would reverse at some point shortly after that, and the whole thing would roll right back down, and then I'd get stopped out, and I gave back everything, and I just didn't know where to close and take profits. Well, learning point and figure, it'll tell you where you should take profits every single time. Whether you are an investor and you're looking at daily time frames, weekly time frames, monthly time frames, we're doing the same thing right now. Many of my coaching students, they're in the oil trade, and it's hit these targets based on what we see on the monthly time frame. So some of my coaching students, they're investing in certain stocks and certain commodities based on what we see, the analysis, the way I showed you here on the bar chart, which was what we're doing on the monthly time frame, the bar chart, with oil, for example, in certain commodities and certain stocks. And then we're pinpointing the entry on the point and figure, and we have a specific count, because we've constructed the point and figure to mimic, let's say, a daily or a weekly or a monthly time frame. So again, we know exactly where our stop is. We know how long to hold on to the trade. We usually have a minimum count or a conservative count, which is the first target. And then we have the overall count, which is the second target. And then if it continues, if this is going to be a trend that develops and continues, well, then we've got more data here to compile a count that would be much higher. So we review every step every single day just like this. When we do our homework at the end of the day, we're looking at the daily time frames. Again, you can adjust this according to how much time you have to trade. Let's say you're going to have a day off from work and you can day trade. This is perfect. You would set up your charts similar to the time frames that I'm using. As I mentioned, I actually traded this with coaching students this morning, new coaching students in a session, and we were able to get this reversal. And we talked about everything as it unfolds throughout that process. Now, this is actually what you see here, this resistance. This is a channel. You may have seen this in a video that I put out just a couple of days ago, and it is the pound dollar, and it's reaching this resistance. So it's testing this resistance again. We actually had an opportunity to trade a bounce to the downside as it tested this resistance, and we're going to continue to watch this to see how this closes today, because it may provide a breakout to the upside. It could. I'm not calling out a trade here. Again, this is just educational purposes. I'm not telling anybody to get into a trade. This trade's already over with. It's already hit our targets. We're done with the trade at this point. We're done with the trade. So if it doesn't go any higher, we are trailing this, and we have, based on what the point and figure would actually print, we have a way of determining that this is likely to be over with to the upside, and then we know that it's probably going to print some kind of reversal. These circles here that you see, these would be the bearish columns. Simple little bearish columns like this is not a reversal pattern. So at this point, we still haven't determined that this is completely over with just yet. So we're going to manage this. But again, if it's hit, if it doesn't go to the 4,000 or it falls just short of it, we're done with the trade here, and we've still traded it to that second target. It definitely has hit that second target. You can see it's sitting here at 76. The second target was 74. So again, don't chase this is what I'm getting at. I never recommend chasing trades. If you can't get in at the right location, then I recommend at all costs, just leave it alone. It doesn't really matter who you're following, who's calling out a trade. And be really careful when you follow some people's trade recommendations, because if you don't get in at the precise time, you could find that you're getting in at the end of the move, and then all of a sudden it reverses and comes back down the opposite direction, and you're wondering why didn't that work, or maybe they're not telling the truth on the trade or something to that effect. So don't get caught up in that. Just use it for educational purposes. Understand and know that this can be repeated on any time frame, any currency pair. Again, it's just not going to happen every day, but I like trading the pound dollar. It does provide opportunities like this once, maybe twice, sometimes 3 times in a week. I can't guarantee that. Every week's going to be a little bit different. It could be, maybe due to the anticipation of economic data or some kind of, Bank of England kind of, setup. So every day is going to be a little bit different, but it really does provide great opportunities to earn well over 100 pips on these breakouts. And point and figure, I'm on a mission for 2021. I want everybody to use point and figure and to learn this process, because I apply this to everything that I trade: gold, silver, commodities, oil, stocks, indices, Forex, crypto. I trade Bitcoin using the same behavior. I've got videos in the membership area where you can see the breakout. It was back in December, early December, we traded a breakout when it was just right around the range of 18,000 to 19,000. We got a breakout in a setup that looks similar to this. Point and figure put me in the trade, and I traded it all the way up with my coaching students to 35,000. That was one of our first initial targets. Then it went to 40,000 was our second target. And then it kind of went sideways and pulled back for a while. And then it broke out. And then we had another target that was above 50,000. And just recently it broke above 50,000. So we get into these trades all the time. We have very few losing trades when you do this. But you're also much more selective about the trades and where you get into the trade as a result of understanding these principles. Remember, we started off here with this chart, analyzing the consolidation, noticing the stopping action, tracking this, the footprint of smart money, knowing when to get into a trade. So we're not trading in and out over here. A lot of people get really bored and they're, like, when am I going to get a trade? I need a trade. I need a trade. I used to do the same thing. I just wanted to make money. I wasn't really paying attention to the the ability and the excitement of being patient and studying the markets, studying what is going on at a deeper level and understanding who is moving price, how they move price around, and why they move price. And then it all becomes really clear that that there are precise opportunities to trade, not trade all of the time. A lot of people just sit down at their desk and they just want to fire off a trade. Again, if you don't have that much time and you're thinking, well, it's not giving me any signals and I don't have that much time to sit in front of the computer, slow things down, go to a different time frame. You're going to find an opportunity doing the same thing. So this analysis and this behavior and the way we analyze the structure, this can be done on the 4-hour. This can be done on the daily. I have coaching students that trade off of the daily exclusively, and they just update the charts at the end of the day using the same basic structure. Analyzing the phases of consolidation, tracking the smart money, the footprint of smart money, waiting for the perfect opportunity, watching how smart money is acquiring or distributing at different levels, and then looking for an entry, and then calculating where you would hold, where your profit targets are and how long you can hold on to that trade. If you're trading off of a daily, weekly, monthly, obviously it's going to be a bigger trade and you can hold on to it, and you just manage it throughout the day. And I'll tell you, when you get into these trades and you trade with the smart money, you know how to do it. This is usually what happens. You get into a trade and you get pretty explosive moves and you ride that trend. It's such a wonderful experience instead of the opposite, which would be to trade inside a consolidation where it gets really choppy and you don't know why it's happening and you don't know why some of these trades are failing and you're trying to use like a little moving average or a little trend line break. Sometimes they work, sometimes they don't. But if you do that inside a consolidation, they don't usually work. That's the issue. So understanding how price moves is the key to everything. It really is. The supply and the demand. You can clearly see it here. Point and figure points it all out for you. It makes it super obvious. You're not guessing anymore. You get into these trades and, I talk about allocating capital, right? You want to get into a trade. You've got so much money in your trading account. You want to find a good trade. This is a good trade. This is a good entry. This is a good opportunity. And this is what usually happens if you know how to do this. This happens almost every single trade if you know how to do this. Learn how to do this. Get into my coaching program. I'll teach you how to do this step by step. I have exercises that walk you through exactly how to analyze the phases, how to analyze these bars that make sense, the ones that are going to actually provide the best opportunities to detect the smart money and the behavior. All of this, reading, volume, I give you my charts, I give you these templates so that you can use volume levels like this. I show you where to get in. I teach you how to use point and figure so that you can calculate the count and you know how long to hold on to a trade. You can determine if it's a trade that you want to mess around with, meaning that it fits your parameters to risk to reward. Let's say it's a 2-for-1, 3-for-1. If that's what you want, you can calculate all of that prior to getting into the trade. You know exactly where your stop loss is. It's wonderful when you can trade and you know exactly what's going on. Learn how to do this. It's going to change your life. You'll be able to live off of your trading results. You can trade any market. It's possible that the pound dollar, today maybe it didn't provide any opportunity. If that's the case, then we just move somewhere else and go trade something else using the same strategy, the same methodologies here, because it applies to every single market. Even as an investor on the larger time frames, you can get into these trades and hold on to them for a long time and make a lot of money. You know exactly where it's going. Thanks for watching. Good luck trading today.